Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues its upward trek for 5 consecutive days and now is nearly claiming its target of 67 cents, while the US dollar index, which measures the greenback strength against a basket of 6 major currencies, posted a fresh intraday low of 102.50 and locking in a fresh 3-month low. Turning to economic data, the Australian Consumer Price Index, or the CPI, fell more than expected in October to 4.9% year on year, according to data released by the Australian Bureau of Statistics. The reading was weaker than expected, missing the 5.2% forecast and down from the previous month of 5.6% seen in September. Along with that, all eyes turn to the US GDP, and also Friday we have the Fed, but on Thursday we've got the US Federal Reserve preferred measure of underlying inflation, the core PCE price index. So with all that data, no doubt the market will be busy, keeping an eye on the core PCE price index, as a weaker price which should see the market drop further for the US dollar. But a stronger number may see a slight correction to some of these current price action that we're seeing for the Australian dollar. So keep an eye on 67 cents in case we see a rejection. But profit taking is expected due to the fact we've rallied over 300 points. Looking to the euro, the market is now just clearing the objective of 110 and could put its eyes on 111, as the dollar is potentially looking for a move from where it currently sits at 102.50 with the objective of 100. This will see some of the markets still continuing their rise. With the euro, as I mentioned, clearing 110 in the New York close above there, looks towards 110.60 to 111.15. Any pullback likely to be shallow, support seen at 109.45. The dollar yen for the 4th consecutive day is falling, and as we can see, it's getting closer to the call of 144.50. Now heading for September lows, the market is looking towards a challenge of 146.5, and as I mentioned, down to 144.5 to 50, or around 50.80 that is, and see if the market can bounce from there. Sterling also on a stellar rally as it now clears further to the 127 and looks up towards 127.45 to 90. Very strong move here as eyes turn to Andrew Bailey, the Bank of England governor, on Thursday. Any pullback likely to be shallow, around 126.80 with a base at 126.30.40. Interesting to see that gold has surged higher, and if we look at the monthly chart, back to the 3-year highs, clearly from a point of 2060.65 and a key area. Like previously, I do anticipate a rejection from there, but keep an eye on that level of 2060.65 because stops are being triggered, and above there looks towards 2080. Any pullback looks towards the base around 2000, figure 10. Wrapping up with oil, we're seeing a slight bounce and looking back towards the top side challenge somewhere around 77.20.30. A break there would give it an extension on towards 79.25.45. The technicals are still a little bit lackluster, so we may find a rejection from 77.20 and see this sideways pattern, maybe even pulling back to the lows, and a key point around 73.5 and reassess. Well, that's a wrap. Thank you for joining me. As always, look out for the interest rate report, and I hope you enjoy the rest of the day.